And so just so that everybody knows, the appraiser actually does the government inspection. So the VA is no different than FHA or USDA. So if they're willing to take an FHA loan, it's any different than a VA loan. There's also conversation that the buyers cannot pay for a wood infestation report on a VA loan, and that's also inaccurate. The only time a veteran cannot pay for the wood infestation report is if the lender is charging a 1% origination fee. So I can't speak to any other lenders on who charges that and who doesn't, but at Movement Mortgage, we don't. We do not charge any fees to the veteran, so we waive our underwriting fee and our processing fee, which is a savings of about $1,400 to the veteran. So there are no charges to our veterans, and that's it. So the appraisals can take a little bit longer. So on VA loans, we like to get those cranking ASAP because the VA actually dispatches the appraiser. So that's really the only thing that could cause some hang time on a VA home loan. And I just think it's very important that we're all clear that we love our veterans and we should accept these offers.
I try to encourage it. I'm like, these are people who fought for our country. Like, can we please give back?
Yeah. And we'll have listing agents be like, switch to conventional. I'm like, they served our country. Like, let's just be humans and let's let them use the loan that they deserve to be able to use. But that's a whole different soapbox that I shouldn't get on today. Okay, and so the next one is USDA. So USDA does have some qualifications that you have to fit into. USDA also sort of gets a bad rap because initially people think they don't have money, which is bad instincts. USDA has to be a fairly qualified borrower. You know, there's not a ton of people that fit into the tight box that USDA requires. So if you have somebody that's USDA, they may not have money, but they fit perfectly in the box with credit, which requires a decent credit score. I mean, typically a 640 minimum, but really we're seeing like 680 to 700 buyers as qualified. So those people, like, they're good buyers. They may not have money, or they may have money, but they want to use it for something else, you know. So USDA is still a very good loan. It is stringent. The DTI qualifications are low, you know. So like a lot of times FHA is riskier because these are people typically that have maybe a previous bankruptcy, a debt to income ratio of 55%, where on USDA, you know, we're probably capping at 37. So like it's a good loan product. So just keep that in mind. USDA does take a little extra time. We like to ask for like an extra business week just because it does have to go to USDA for approval. But that is just formality. It's not real, like we've never had a loan sent back once it's gone to USDA. Okay, the third, and this is like the topic of my conversation today, is the Alabama bond loan. It is underutilized, nobody really knows about it, and a ton of lenders hate it. And so they don't talk about it, but Chris and I have decided, like, we're just going to double down on the bond loan because it's a super cool product. It's state backed. The rates are incredible, and it's gotten much easier. It's a much easier loan than it was last year. There is an income cap. There are some caveats to it, but basically if the borrower makes under 130, they qualify. If they make over 130, they still qualify, but they have to be more qualified of a buyer. It's available in FHA and conventional product. Okay, so basically we need a 640 minimum credit score. That's about it. Debt to income is 45%, like, period. That's principal, interest, taxes, insurance, you know. So like if it's in a flood zone or we know insurance is going to be super high, those are things that we need to know on the front end, because we cannot go over 45% back end DTI, which means all of their debts and liabilities that are on their credit report plus the current mortgage all has to roll in and equal 45% of their monthly income. Okay, so I'm going to start with FHA. So an FHA loan is typically 96.5% of the mortgage amount. We're going to use very easy numbers today. So everything we talk about is going to be based on a $100,000 loan amount. So on a typical FHA, on a $100,000 loan, we're going to borrow $96,500, which means typically they would come to the table with $3,500 as their down payment. Well, what bond does is they come in and they say, we're going to let you borrow this $3,500, but wait, it even gets better. Last week, they came back and said, hey, instead of borrowing the 3.5%, we'll actually let you borrow 4%. So now you can borrow even 0.5% more for closing costs.
Mhm.
So truly no money out of pocket. The closing costs are a little bit higher. There's a 0.5% commitment fee, but bond is now letting us borrow that in our down payment. So on a $100,000 house, we can actually borrow $104,000 to cover the rest of the closing costs. So now our closing costs are going to be back to normal. You know, the typical $5,500, $6,000 worth of closing costs that sellers don't have a problem with. It's super cool.
So is that, I guess, is the extra that they're letting you borrow, is that just dispersed?
It
throughout
covers,
30 years?
yeah. Yes, no, great question. The second, the small second, it's a 10-year loan.
Okay.
The small second is a 10-year. The first large loan is a 30-year fixed amortized. The second is fixed amortized over 10 years.
Okay.
And so we just try to tell people, you know, if you're adding anything additional to your mortgage paid on your small second, and let's get that gone, put that equity back into your home and give you that pay raise. An average payment on the small second is probably $75 to $100 a month. So not a ton of money. And it's just like, it's an easy loan. We don't even have to get tax returns on this loan anymore. It's not like USDA where they're just heavily scrutinizing every transaction inside bank statements and taxes. So it's pretty cool. Okay, so any questions on the FHA side of it? There is still the funding fee. So you're still paying your funding fee that gets wrapped into your loan, and then you're still going to have PMI on that product. Okay, but the PMI amount is the same. Oh, and the interest rate is set by the state. So if you guys go to ahfa.com, you can do this any day. You can see what the rates are. It's not credit driven. It's not DTI driven. It is program driven. So I think we were at like 3.99.
Yes.
I think rates have gone up, obviously.
Conventional and then FHA is 3.75. Well, that's changed a lot.
Yeah, I don't know. I'll double check, but like, and it changes daily. So if you ever want to know what the rates are, you can go look. First and second have the same rate.
Will that be locked in?
Fixed for 30 years unless we refinance them out of, and that ideally would be the goal. Like anybody we put into FHA, like that's what we're working on right now is a couple of years ago, I did a ton of dream to own, which was kind of like a bond where you could borrow your second, you could borrow your down payment, but our interest rates were really high. Well, everybody has all this equity now. So I'm trying to get all of those people back down to like a 3.75 with no PMI. You know, we're saving people hundreds of dollars. So the goal would be like anybody that we put into an FHA loan that we continue to monitor their equity position and then refinance them once they get out of PMI territory. But we pay attention to that. We put everybody in our database so that we know when the equity is there. We use HomeBot if anybody wants to talk to me about HomeBot after, but I can contribute probably $150,000 worth of income last year in refinances to HomeBot. And if people like actually mined their HomeBot database and saw people were in equity positions, you guys could be getting sells and buys, sells and buys, sells and buys, if you could show them how to level up in their finances. But that's for another day. If you want to talk about HomeBot, let me know. Okay, so let's talk about the conventional side of it. So on a conventional loan, there is a 3% down program. You either have to fit into the income qualifications or you have to be a first-time home buyer to do the 3% product. So this is the 3% product. So basically it's a 97% first loan, so a $97,000 loan. The second loan can be 3% or 4%. So you can get a whole extra percent on the conventional instead of a half on the FHA. So basically you can borrow an extra percent only towards closing costs. Like they can't get a check back or anything like that. We can't buy down the rate on these because they're state set. So it would just really just need to go to closing costs. What am I missing on conventional? That's really it. I mean,
no upfront MI conventional like there is on the FHA.
Yep. No upfront funding fees. They will pay a monthly PMI until we can refinance them, or it just I don't even know if it naturally falls off on this one.
It does.
It does.
It is. It's going to be the same way on that as the
On the conventional.
And your pre-approvability from us will be a conventional pre-approval letter.
Correct.
So pretty much with the 3%, you'd be open to, in layman's terms, you could buy a property that maybe needs a little work. As long as health, safety, all that crap, the appraisers aren't going to hit, because that's usually the caveat, right?
Right.
Conventional, they all want to buy a fixer upper, but they can't swing the 20% down, then plus the closing costs and all that. this kind of is that product.
Yeah,
That's who
and
that
this
tier
one-
was.
Now, the conventional it's tougher. I mean, we've had like qualified borrowers that it should have worked, that it did not like it at all.
Really?
Yeah, so, and you can also like retain property. So VA, you can retain property, which means like you have a conventional loan or something like that and you're buying another home, you can keep that home. USDA, you can't own another thing. And like, that's some of the things that pop up on the tail end is like they're buying and they're like, I don't own anything. And then they run data verify a week before closing to make sure there's nothing else out there. And they're like, what's this? And they're like, oh, well, that's a trailer. And I'm like, well, do you own it? And they're like, yeah, you can.
My HUD
You
exam.
can, yeah. Or even a piece of land. Like we've had this happen where somebody's mom deeded them a piece of land. They didn't even know it, or they said they didn't. And
Right.
they can't go USDA because Fannie Mae, Freddie Mac look at this as ownership is if you have deeded property or you've been on a deed. And so with bond, you can. Now, you can't have two FHA mortgages. So say you're in a current FHA mortgage and you want to buy another one, you would have to go into bond conventional. So you can't have two FHA mortgages at the same time. There's some caveats to that too, but we're not going to talk about that today. Just keep that in mind, you know. So if they have a current FHA mortgage, we need to get them into conventional. And we've done that once and it worked, and it was fine, but they really like, you know, lower DTIs. And we've had to have like, the minimum credit score on the conventional is a 680. We've had a tough time with 680, so really like 700. So these need to be fairly qualified borrowers too. But all the low to no money down, that's what I like to stress to people, is that just because they're not coming to the table with money does not mean they're not qualified borrowers. Typically they have low DTI, solid income, and really good credit to qualify for these products.
I almost wrote that last kid off because he had what?
$2,000 in the bank,
thought
but he's
you
a
would get
great
a house.
buyer. I mean, he's got a 750 credit score and great income, you know?
Under contract.
Yeah, so, I mean, and that's the thing, just because people don't have money doesn't mean they can't buy. You know, it is tougher in a market where you have to get seller paid closing costs, but, you know, if we can be strategic with it, they're working.
Yep.
They're working. And so, like, I want to do a ton of these bond loans this year, like a ton. I loved Dream to Own when we had it. I'm still like super depressed that it's gone. But this is my new Dream to Own. So I'm trying to tell everybody about it. It's easier than USDA. So like on USDA, we have to do 2 months worth of bank statements. They look at every single deposit. If it's 5 cents that came over from Venmo, they want to know what it is. $50 birthday check, got to know what it is. So we have to do every single deposit for 60 days that are non-payroll, non-tax, non-social security, and do letters of explanation on these.
So why does USDA get the, in your opinion, versus the VA? I understand the WIR, they're like, oh, you gotta go through this. But USDA, in my experience, has been a bigger pain in the butt.
Yep.
Like, really?
It is,
Yeah,
though.
like,
It
I've never
is.
had a
It
USDA
can
where I'm
take
like,
forever to close because the government don't get in a hurry about it.
Well, they don't. They have restructured those. So they went from state to regional. So like
Yeah.
turn times on USDA have gotten like way better. I mean, we've had some loans this fall that, I mean, we got the commitment the same day, which is rare, but we also work backwards in our loans. I mean, like everything is checked precisely before we even send them to USDA.
is the idea though that they're more qualified than the VA? Is that kind of the general, I mean, it seems like anytime the government's involved, you're gonna have to have more hoops to jump
So
anyway.
VA is just very specialized, like it's specifically for honorable discharge veterans. But in terms of like seller, they're the same, other than like the appraisal, you know, like where the appraisal could take an extra 4 to 5 days
On which the VA
on
appraisal?
VA.
they're
Because it all
looking
has
for
to
other-
go through the VA.
Okay.
But
A
that's
VA
it.
backed appraiser, you're saying?
Correct.
Yeah, okay, I got you.
I got a question. I don't know if I asked you this before, like when I first came on, I might not have. Because VA and FHA are so often looked down upon whenever you're putting in, you know, everybody wants to see conventional. If I know that it's gonna be a VA offer or an FHA, and I reach out to you, are you willing to call that listing agent
Always.
and be like, hey, 'cause I had another lender do that, like even made a video and sent, like that's how we got it accepted. That, I think that would help a lot, because not all these listing agents are reaching out to these buyers, lenders and saying, hey, tell me about your client.
No, nobody is. And so
I do.
what I like for people to do, like if we have a pre-approved buyer, like copy me on the offer. I will respond instantly to all parties and say, hey, the Franklins are amazing buyers. They are highly qualified. You know, we are ready to go into underwriting the minute we have a signed contract, you know,
Okay.
and every time I've done that, we've gotten the contract. So copy me on it.
Okay, yeah, I didn't think about that
Yeah.
before, but that's a good idea.
Yeah.
Okay.
And just let me know, let me know it's coming.
Right.
So I can make sure I'm paying attention and that we've scrubbed this file appropriately. Our movement buyer's advantage product is back specifically for commission only and self-employed borrowers and variable hour borrowers. So like the faster we can get these apps in, because people don't know their variable hours. We don't know how that happens, but they don't know. So what variable hours means is that they're either not salary or there are paychecks that do not equal 40 hours. You know, like consistent non-variable hours would be 80 hours every 2 weeks, but we see 76.33, 26.4. That's not 40. So if it's not 40 and it's not a one-off, like where you can't go look at the year to date and divide it by this and it equals this, it's variable. And that screws up everything. Variable hours are the worst. So the faster we can get our hands on paycheck stubs, the better position we can be in to make sure that these people are not variable hours, or we at least have an explanation. So getting those apps in as soon as you can. If you're an agent, download the Blend Agent app. Blake is like a rock star on the Blend Agent app. He puts his leads in. We get the leads. Blend starts following up with your client for you to apply, and then we put them into our new CRM, and then we start following up with them too.
Can you, or do you have time to touch base on that client that I sent you that she's self-employed? And I think
Randy?
Robin. That was a new, you say you are looking at a new program or whatever.
Oh, the bank statement.
Yeah.
She and I touched base yesterday actually, and I'll fill you in on that.
Okay. Can you kind of fill us in on that type of?
Oh, the bank statement loan. Yes.
Yeah.
So we have a new bank statement loan. It's in-house. We haven't done one. It is cool because it's in-house, which means it's not brokered out and we don't have control over it. We've not done one. It's a 640 minimum credit score. It's for self-employed borrowers. We need 12 months of business bank statements.
Not tax stuff. That's the big thing.
No taxes.
Right.
We don't even want to see them.
Somebody's hiding something.
Now,
Who wants to pay tax?
well,
You don't have to.
You don't have to if you want to do a bank statement loan. But a lot of times, like we'll ask, you know, like I'd like to see the taxes. I may not use them, but like let me look, because we have these self-employed borrowers and they're like, well, this is my income. And I'm like, oh, it's not. It's not your income. You know, you actually wrote off more than you made, and you're carrying over, you know, $400,000 worth of depreciation for the next 17 years per line, 32. Okay.
16,000.
Yeah, so we're negative 32 grand, but okay. So let us see them and let us just run a quick income calculation on those before we jump to the conclusion that we have to go bank statement loan. There's a lot of people that just need to go bank statement loan. They may own a bunch of properties and depreciate a bunch of properties, and you know, like capital gains doesn't count. You know, so like say somebody flips the house, they make $65,000 on it, even though that's what they do, it's not income in the eyes of the government, which is terrible.
Yeah.
Yes,
So
ma'am.
Eric's worth.
If you have an LLC and you do it for 2 years,
Yeah.
if you've been doing it for more than 2 years and have an LLC, it doesn't count as a business.
If you have an LLC and you've been doing it for more than 2 years, yes, but it doesn't mean that you claim all of your money as taxable income.
Plus most of people write off a huge portion of the houses, and when you buy a new house, you write off a huge portion of that.
Yeah.
So
Oh,
you're
I
taking on
see.
losses.
Yeah.
That's fine.
So it's like the adjusted
Taxes are crazy.
taxable income. Yes, Kathy?
So I've had a client that was self-employed, and the other lenders that we spoke to talked about this loan, but they said it's extremely risky and they wouldn't.
That's because
suggest
they
it
broker
for
it.
anybody and can ruin careers.
Yeah.
So I just wanted to, well, that's why I'm like,
Yeah.
okay, well, I'm getting this information, so.
Well, we
You
as a
do it,
team,
but it'll
well,
ruin your
that's
career.
because it's
That's what they said,
brokered.
it will
Yeah.
ruin mine and your
Yeah.
career. That's wrong.
Yeah.
So it's like, okay.
Well, that's because it's brokered. So the
Okay.
Diana Lending team made a commitment that we don't do brokered loans anymore. Like we tried one, it was a disaster.
What do you mean by that?
It means it's not a movement mortgage loan, and there's a broker team over here on the side doing whatever it is that they do. I don't know, don't have any control. Nobody answers to me. I have zero control, and that makes me have heart palpitations.
So that's the risky part of it. is when it's.
It's reputation and it's relationship. Like you want an answer and I don't have one. And I may not get one
Yeah,
because
I'm
it's
confused
not,
as why they think it's so risky though.
well, because it's just people. So what typically happens in mortgage is somebody gives us a loan application in a package and they look at it and say, okay, this is good, but they
Yeah.
haven't really looked at it.
Right,
We kick the can down 35 days. We've paid somebody for title. We've done the appraisal. We've done all of this stuff. And then the underwriter actually looks at it 35 days later and they're like, this isn't a loan.
yeah. This is garbage.
Yeah, what are you doing?
Yeah,
You know? And so people have packed and moved and done all of these things.
I see.
So, and it is risky and it's just hard when it's broker, you know, they're brokering it through Wells Fargo and Goldman Sachs and, you know, all these large entities.
Well, I think too, just as on a real estate perspective, what I've discovered, because I've retained some of this and I've learned much more as I've gone on more than I just listening, but just getting them to you has been
Just
very
let me
pivotal.
do
Like,
it.
yeah, like just talk to her. If you got $1 in your account or you got 100 million, like, I'm not going to try to, we used to teach like, oh, you need to know all these programs so you can put them in there. And I gave up on that because it seems like one's always come out new every other
Yeah,
month.
there's new ones all the time.
I didn't know about that bond.
Yeah, it's been here for a minute.
I've never
Yeah.
heard of it either.
Well,
Not
there's-
That's
I wrote
because
off
nobody
that
wants
kid.
to do it.
Well,
There's an easy way to phrase that
Right.
too. Let the professional be the professional and handle what she did.
Yeah.
Well, that's easy to say though, when you got somebody like, I had a lady come in here and she was pressing me and I'm like, no, just fill out the app. Like,
Yesterday?
yeah.
Yeah.
And
I
right there
always
she
tell people,
called.
I'm like, they'll ask me about stuff and I'm like, we work closely with our lenders, but
Yeah.
they like, I like to let them stay in their lane because they know more about what they're talking about and know more than they're not gonna tell me how to run my side. But it's-
Well, and it's ever evolving. Like we were working on one loan yesterday, specific like radar, like we've got to figure this one out. And the data that we pulled is actually going to help us on this one, you know, because we
Yeah.
got somebody else involved who writes guidelines and stuff. And he was like, no, but you could do this. And she's like, this will work for this one. It won't work for this one, but it's going to work for this one. You know, so like we're always brainstorming, always learning. Guidelines are always changing. So just get it, like, just like y'all know the market. I mean, people ask me all the time, they're like, you know, how much is this? And I'm like, I don't know. Like, I have no idea. I just don't pay attention to it anymore. I mean, I know if appraisals are coming in short and then I'll like go do the research, but I'm just not paying attention to that because my client's not necessarily the market anymore. It's the realtors who are studying the market. So let us do that. Just get them to us. Just get them into Blend Agent app. Let us follow up with them. I mean, Blake sent me a lead yesterday and I called her and I'm like, hey, and she's like, this is her right here. And then I hear
Yeah.
Blake in the background. I'm like, are you with Blake?
It was crazy. Yeah. Like she goes, who's this number? And I looked at it and I'm like, probably a spam call because she doesn't have your number saved. And it was 251. And I was like, I don't know. Still talking to her.
Yeah.
And then I heard you on the background. I was like, well, that looks really good. Like even Jacob looks like, whoa.
Yeah, so like we try to like just call, like we just try to get them on the phone because that's our goal is to have conversations and get these applications. And like she's not ready. She's not ready to buy, but I'm like, fill out the application. Let me see where we're at. We'll get you in shape. And I'm like, Carissa just like loves to help people with like credit. And like when she talks to somebody about what they can do for credit, like you can literally hear her soul singing. Like it brings her so much joy. So like, just let us get our hands on these credit reports because she'll do her thing. And like, hopefully we can get these people where they need to go in 30, 45 days, and get them by
And you got to
announcements.
get paid then too. Like it's easy to give up on them and go, whatever.
Well, and our new CRM like will continue. Like our movement has spent like millions of dollars, and I've really boycotted the CRM until this year. And now I'm in it and I'm learning, and it's wild. And there's like credit repair drips and all this stuff and all these journeys, and it's like super smart and laced with artificial intelligence. So if we can get them in, and what happens with Blend Agent is the minute you put it into the app, it attaches you to it. So everywhere it goes in the movement database, you're connected to it.
Unless
So everybody knows.
they click not to share with you, which I was going to ask you about.
Wait,
one-
what?
No, I think that's different. So the not shared
Yeah.
means we don't share their personal information with you.
Yeah.
If they check mark that, then I can say, yo, do
Oh.
7 hours last
Well, I had one that came through last night that was weird that I just had pushed into about 400 or 500 and then it said, right, he's not willing to share, which I don't care. You don't
Yeah.
see anything,
week.
but,
That's just check mark to share the personal data.
oh,
And if
I thought
ever
they
Who
had
was
the
it?
option.
We can go there.
I put one through Raheem Moore last night.
Yeah.
At like 6 or 7.
He's already applied.
Yeah, he was doing it, and I got like this weird notification on my phone that said like Raheem's opted not to share with you, just thinking he's probably paranoid.
Okay,
Yeah,
well,
but I
we'll figure
don't,
that out. Hopefully it's
All I
not
care-
loan status. And the other cool thing is like, once you put them in there, you'll be updated. You'll know that they've
Yeah.
applied. You'll know when they go under contract.
Right
Like
on
it's
the spot.
real-time data.
and you could use it as, you don't want to use it all the way as your CRM, but I know a lot of times I'll make calls out of it and it notes your calls and your emails.
Yeah.
On the agent side. So if you really didn't want to, I mean, you ain't gonna have no drips, but I use it as a little way to keep in touch with the ones that I push to the next level. So I talk to them, I push them, and on like a Saturday, I'll be sitting there and I'll just call, hey, it's Blake, just making sure you got all their info right there too. So
Yeah.
it's double edged.
It is. And then last thing is the Agent Playbook. These go out every single month. Okay. Oh, I'm not. Back it up. The Agent Playbook, we put these out every single month. This is my beautiful team. We got Megan added on here. And there's like tons and tons of data in this. So like,
I'm gonna go into two things.
yes, he's gonna go
specifically.
into that. So
But-
these are his favorites.
Are you done?
I'm done.
Okay, real quick, for anybody gets up, Jacob, you're fine, you're in the clear. But listen to this real quick, Liz, watch me for a second, Kathy, watch me for a second, just real quick. If while she was talking, if you were not thinking about content, video content, then you're not doing it right.
I've already got video. I'm like, we gotta.
Do you understand? I mean, like, please tell me if you don't get that. If you are watching this presentation and not going, oh my gosh, I need to create content to help educate the public on these three things, especially this, we have some work we have to do.
I think it's imperative that we do something like that. Like it's.
It is part of our job is to educate the public, okay? And you educate to attract. But so if you're watching this presentation, and you were not thinking about content, video content, then you need to schedule. You need to go on dinabustle.com right now and schedule time. And we need to talk offline about like what needs to take place so that we can change your mindset into being a content creator. Okay, so please do that right away. The second thing I wanted to mention is Carrie and Diana were talking about winning multiple offers. I've got a video on Jasonville University under home buying and selling tips on my top 10 multiple offer strategies. So you can watch that video. Just go to jasonvilleuniversity.com. Okay? Yeah, .com. Like, I think that video's been watched like 4 or 5 times. And y'all are still wondering, like, how do I win a multiple offer situation? We've got the information right there.
You need to offer your kid up at this point.
No.
I heard,
Yeah.
I'm like, do you want
All right,
my
Jacob.
ovaries? Okay.
Cut it.
I heard kidneys were a good thing.
Well,
I
whatever
put one
works.
in the other
Blake's
day.
got
I
a
thought
couple
for sure it
creative
was